So, welcome to the fourth or fifth episode. I'm not sure. One of them. This is where we'll start to get the content will start. Still be simple, nice and easy, just simple explanations so you know what they are. But this is the type of content now where you need to pay attention. So stop fucking slouching on your chair. Stop being lazy. Get your notebook out, get your pen out, and get making notes, because if you don't make any notes, then you're not going to get it. And then what's the point in watching the videos if you're not going to end up getting it? So trust me, just make notes and then probably go check your chart and try and see what we speak about in the video. But the next 3 episodes are going to be on premium discount arrays, or PD arrays. The PD arrays, there is more than this, but we're just going to focus on these 3 because these are like the core PD arrays, nice and easy. Order blocks, fair value gaps, inverse fair value gaps, and this episode is going to be on order blocks. So all PD arrays are just, you look for PD arrays in every single trade that you take. Like every trade you take will have a PD array, because all it is just a discounted level in price where the institutions are likely to make price go before continuing with the overall trend, because last episode we did trends. So this episode is on order blocks. We'll go down to the 1 hour. So first, what is an order block? I'm going to abbreviate it to OB. So an order block is, and the last, this will be a bullish order block, by the way. Obviously everything is vice versa for bearish. So this is the last bearish candle before a big move that sweeps something. So nice and simple, that is all an order block is. It's an area where institutions are likely to send price because there's a lot of resting orders in the market, and it is the last, sorry, my spelling is fucking awful. It's the last bearish candle before a big move up, and inside this bearish candle there's going to be a lot of resting orders waiting to be filled from the institutions because it's a discounted price. So obviously they want to buy at the lowest price possible before continuing up. I'll show you an example. I'm going to show you an example of an order block now. Alright. So in this market structure here, you can see we've got this high. Obviously, we're in a clear uptrend. We are on the 1 hour time frame as well. So the higher the time frame, the more probable that the order block is going to be. So here, look, we've got up close candles. Then we've got a bearish candle here, which would be your order block, because last bearish candle before a big move up that takes out something. So the move caused by this order block, the move caused by the order block took out this high. So this will be your order block, your higher probability order block, because the last bearish candle, price moves up and it sweeps something, it takes out this high. So this would be where there's going to be a lot of resting orders in the market, so it's going to be an area of interest, an area where you want to be looking to buy from. And yeah, that's literally all an order block is, just a candle that's closed in obviously the opposite way than your bias. So say if you've got a bullish bias, you're in an uptrend, you're looking for the last bearish candle before a move that sweeps something. So I'll write it down just so we're clear. Okay, so you want the last bearish candle before a big move that sweeps something. Oops, spelling's gone a bit there, sorry. So yeah, the last bearish candle before a big move that sweeps something. You can see as well, this is London high. Price prints the bearish candle, closes, and then price moves up, sweeps the high, creating a 1 hour bullish order block. And as you can see, price eventually returned back into the order block, collected all of the orders, and then moved up. So yeah, that's literally all that an order block is. We'll do a bearish example now, if I can find a good one. Yeah, here we go. So as you can see, try and spot me the bearish, well, there's a couple, but in this range here, you can't even see her, sorry. In this range here, try and spot me the bearish order block. Pause the video and I'll leave it for a second. Alright, so you should have picked up the right one, but if you didn't, don't worry, because you're just learning it. So I don't expect you to get everything straight away, but this is pretty straightforward and pretty simple, so don't overthink it. So remember, for bullish, we said the last bearish candle before a move up that sweeps something. So for bearish, it's going to be the last bullish candle before a move down that sweeps something. That's your order block. That would be this candle right here, because the move caused by this candle sweeps this low. So that would be your bearish order block. Nice and easy, nice and simple. You can see price went down, came back up, tapped into the order block, collected the orders, and then came back down. That's all it is for order blocks. It's fairly simple. So yeah, for your 1 hour and 4 hour, and obviously your daily and weekly, but they're going to be bigger. This is a little bit more complex, so don't worry if you don't get it. Just focus on the core basics of identifying order blocks and what they are. But what you want to do is, so within your order block, so you've got a higher time frame order block here. If you go down in the time frame, so this is the 30 minute. Got a 30-minute order block inside of that. Then say you go down to the 15-minute. There's a 15-minute order block. Then the 5-minute. These are your lower time frame ones. Oh, why is it something to fucking Narnia every single time? Sorry, I've got to scroll back. There we go. Sorry. So this might be a bit more confusing, but don't worry about it. It's just you find a higher time frame order block, and then to get more precision, you can look inside of that higher time frame order block to find lower time frame order blocks inside of the higher time frame order blocks. If that's English, it makes sense. But yeah. So 5 minute you can see here, but it didn't quite tap the 5 minutes, so don't worry about that. I think the 15-minute was your, yeah. So you can see, do you remember what we said about the candlestick structure? So the open, the low, the open, the close, the high. This 15-minute order block here, the opening price, taps it to the tick, and then comes down. So say if you were to set your position there, maybe above, let's say it's the CE, and you would have targeted this low down here. Look at that, 1 to 11. But that's just an example of how it works. So you should get order blocks. They are fairly simple. It's just an area where institutions are going to make price go back to, so they can get a discounted entry before continuing the trend. Hopefully that makes sense, and hopefully you understand it. And once you understand it, you can go down. You start off with the higher time frame order blocks, and then you look. So this was originally a 1 hour. You start off with your higher time frame order blocks, and you go down in time frames and look for order blocks within the higher time frame order blocks to get more precision. But don't worry about that too much yet. Just focus on identifying the order blocks for bearish, bullish candle, last bullish candle before a move that sweeps something. For bullish, last bearish candle before a move that sweeps something. Fairly simple. Just go onto your chart, try and mark out some order blocks, send them to me, and then fair value gaps next. Bye.